What's up, everybody? This is Joey from Universal CPA Review. In this video, we're going to elaborate on the head honchos of financial reporting standards in the United States. No, we're not talking about the FASB, we're talking about the SEC. They're the ones that legally establish GAAP. So before we get started, just a quick reminder to subscribe to our YouTube channel and join any of our Facebook groups. If you really find this video helpful, don't forget to share it with your friends and invite them to our Facebook groups as well, because the more the merrier. And if you consider yourself more of a visual learner, Universal CPA Review might be for you. Our program offers bite-sized video lectures that come with a systematic problem-solving approach. We're also the only CPA review course that offers video explanations on every single multiple-choice question. So if this sounds like something that you're into, feel free to use discount code UNIVERSAL2021 for 25% off any of our products. All right, here we go. Okay, so digging into some SEC reporting requirements. And as we go through this, we're going to focus on 3 financial reporting companies from 3 different publicly traded entities. Okay, so keep in mind, these 3 different companies are going to come from 3 different countries and 3 different cultures. Okay, so starting with Quick and Creamy, this is a United States-based company, and they pride themselves on selling the creamiest ice creams in North America. Still within the North American region, just north of the US border, is a company called O Canada Ice Cream. And the third company we're going to talk about is a company called 20 Kulfis. So for those of you who've never heard of a kulfi, this is India's healthier version of ice cream. So regardless how much you absorb from SEC reporting requirements, this is a fun fact you'll be able to take with you. So let's start by talking about the United States-based company. All right, we are talking about US GAAP after all. It only makes sense that we start here. Okay, so we remember that the SEC legally establishes the financial accounting standards in the United States, right? The FASB is technically the rule book that we need to focus in on, but the SEC has the legal authority. So the SEC puts forth regulations that financial reporting companies must abide by when presenting their financial statements. So when you think about financial statement readers reading these financial statements, think of them as reading this story. But there are different types of stories that can be told. So the financial statement reader could be reading the story on the company's annual performance. They could be reading a story on the company's quarterly performance. And in the event that this is not a US reporting company, right? Maybe it's based out of Canada or even India, then they could be reading a different story altogether. All right, but we'll talk about that in just a little bit. So when you think about Regulation SX and Regulation SK, I want you to think about the SEC's storytelling requirements. Regulation SX is the storytelling requirement for financial information that is being presented, whereas Regulation SK is going to represent the storytelling requirement for non-financial information that is being told. So let's start with Regulation SX. This specifically is talking about US reporting requirements for Form 10K and Form 10Q. So when you think about Quick and Creamy, you're thinking about the Q in Quick. And you're going to think about Form 10Q. And when you think about the funny way that they spell creamy with a K, you're going to think about Form 10K. Okay, so Form 10K represents the company's annual report. This is the story that is being told for the company's calendar year. So this is going to represent Q1, Q2, Q3, Q4. This is the story for the current annual period. Whereas Form 10Q is a little bit easier to remember intuitively because Q stands for quarterly. So this is a condensed financial report that displays financial information for the company's quarterly performance, not annual performance. So by definition, Regulation SX can be outlined nice and pretty for you on the exam. So this is outlined as the governance of both the form and content of financial information and financial statement disclosures. So what are those financial statement required disclosures that Quick and Creamy is going to be required to disclose? These forms will include the income statement, the balance sheet, changes in shareholders' equity, the statement of cash flow, also going to include some additional footnote disclosures. So at the highest of levels, the annual financial statements will be reported in Form 10K. Okay, so they're going to be referred to for companies' annual reports. These reports provide detailed information on a company's business and their overall financial health. These reports are often going to include audited financial statements that must be filed with the SEC on an annual basis. Okay, so when you think about Form 10K, this annual report, I want you to think about this again as the story, but I want you to think about this also as this package of information, right? This financial statement reader is going to be unpacking all of this information in this 10K report. Okay, so this report is going to require certain basic information, such as the name of the registrant and state of incorporation, It's going to include the complete set of financial statements, which we remember from previous lectures. It's going to include properties owned by the corporation, as well as existing legal proceedings. But the primary things to note for the exam is that, for one, this is going to represent annual financial statement information. Also super important to note that the financial statement information that is being presented will be required to be audited for public companies. Okay, so this is also going to require management discussion and analysis reports. So where the annual financial statements, this 10K report is different from interim financial statements, is that the annual report will require a few different variations of these financial statements. Okay, so the annual report, right, this Form 10K will require the income statements for the previous 3 years, also the 3 previous statements of cash flows, 3 of the statement of changes in owner's equity, as well as 2 balance sheet reports. Whereas the interim financial statements reported in Form 10Q will include interim financial information. Okay, so this is financial information that is reported on the entity for a period of less than 1 year. Right, this is quarterly information and sometimes known as interim financial statement information. So we said to think about this as a package of information. The package of information for Form 10Q will require quarterly information, and while we said that Form 10K will require audited financial statements, the financial statements in the Form 10Q package will not be required to be audited. Okay, so these are unaudited financial statements. They simply require a review. Okay, and let's not forget about MD&A, management discussion and analysis, but this is going to be interim MD&A. Okay, so Form 10Q is still going to present the primary financial statements. We're going to focus on the income statement, the balance sheet, and the statement of cash flows. So the 2 most similar financial statements under quarterly reporting is going to be the income statement and the statement of cash flows, whereas the balance sheet is going to be a little bit different. So the income statement will report the profit and loss performance as of the most recent fiscal quarter. So let's say we're talking about Q3 for the current year, which we're going to say is year 2. When we say as of the most recent fiscal quarter, we're saying that this is Q3, right? Q3 for the current year. But that's also going to include the performance for all current year quarters leading up to Q3. So in other words, that's going to also include Q1 and Q2 for year 2. Okay, but that's also going to include as of the prior fiscal year. Okay, so this is also going to be including Q3 year 1, right? So think of this as the 12-month period. Q3 year 1 all the way up to Q3 year 2. Okay, and also keep in mind this is going to include the reference to the performance as of the end of the preceding fiscal year. So that would be as of the last date of year 1, right? December 31st, year 1. So for the purpose of this lecture, let's skip over the balance sheet and come back to it and go straight over to the statement of cash flows. Okay, because the statement of cash flows is nearly identical as what we would report in the quarterly reports for the income statement. Okay, so this is going to be as of the most recent fiscal quarter, which we said is Q3 of year 2. Also going to include as of the prior year fiscal quarter, which would be Q3 year 1. All right, we're also going to mention as of the end of the preceding fiscal year, which would be Q4 year 1. Okay, so finally, when we think about the quarterly balance sheet, all right, so thinking about Quick and Creamy presenting their balance sheet in the quarterly report. Okay, so like the income statement and the statement of cash flows, they're always going to present this as of the most recent fiscal quarter. So Q3 year 2, but that would also include the information of Q1 and Q2 leading up to that point. All right, this is where it gets different. Although they're going to be required to present the information as of the end of the preceding fiscal year, right, as of the end of year 1, so that would be Q4 year 1, the only reason that they would be required to report as of the prior year fiscal quarter, as we mentioned would have been a Q3 year 1, would be if the presentation is necessary to understand seasonal fluctuations. Right, if Quick and Creamy for whatever reason sees a lot of volume during a specific season in Q3, then they would report that comparison as of the end of the prior year fiscal year. But it's not going to be required regardless, like it would for the income statement and the statement of cash flows. Okay, so that's the standard for Regulation SX. That's going to be for financial reporting regulations. Whereas Regulation SK is going to govern the form and content to all non-financial statement related disclosures. So what are non-financial statement related disclosures? Okay, so this is going to include things like the description of the business, the description of any stockholder-related issues, management discussion and analysis, changes in and disagreements with accountants and auditors, as well as information on directors and management. All right, so keep in mind, Regulation SK is non-financial information, whereas Regulation SX is going to be financial information. Okay, so if you're sitting there and you're still thinking to yourself, do I really need to know this for the exam? Isn't this sort of one of those areas that I'm probably not going to see? The answer is it's not going to be one of the core areas that the exam loves to test, but that is never the attitude that we can have if we're trying to pass this exam, okay? Because collectively, all the little things are going to add up to equal 15 to 20% of your score. So you have to know the little things in order to get the 75% or better that you're looking for. Okay, so let's not blow this off. So now we're talking about the required dates to file these two primary forms. So the primary financial statement users, who are the investors, the creditors, the lenders, not the regulators, want to see the story of the company in a reasonable time frame. Okay, so quick and creamy investors aren't going to sit and wait forever, right? The SEC is telling this United States-based public company that they need to put together the 10K annual report and the 10Q quarterly report in a reasonable time frame. Okay, so this comes with some little nuances that can easily trip you up. So let's pull out that mental map and make sure that we could give ourselves a roadmap for getting these questions right on the exam. So when are public companies going to be required to file these reports? Well, the SEC tells us that it depends based on the market valuation of the company, right? What's the company valued at on the open market? So the SEC also tells us that this is going to come in 3 tiers of companies. Okay, so 3 tiers of companies that we need to hone in on. We have what's referred to as large accelerated filers, and they have a market valuation of $700 million or more. Okay, so these are the heavy hitters. They're worth a lot of money, so the SEC is going to tell companies naturally that they need to get on the ball and make sure that they present the financial statements in a more timely fashion than companies that are less valuable. Right, so think of the SEC as prioritizing these companies and putting pressure on them to make sure that their annual report and their quarterly reports are out the door in a quicker manner. Right, it's likely that more financial statement readers are going to be relying on these companies than smaller companies. So these are the biggest companies in terms of valuation as far as our 3 tiers go. Okay, so as far as Form 10K annual reports go, they have a reporting deadline of 60 days after the end of the fiscal year. Whereas their quarterly reports, right, that Form 10Q, will have a 40-day deadline at the end of the fiscal year. Okay, so accelerated filers aren't considered large accelerated filers, right? We're dropping the word large, and intuitively, that's going to make them a little bit smaller in terms of market valuation. So these companies will have a market valuation of anywhere between 75 million and 700 million. Okay, so they're going to have a little bit more of a runway to get these reports out the door. Okay, at least as far as the 10K annual report goes. Okay, so these companies will have a 75-day deadline at the end of the year to get these annual reports out the door. Okay, they're also saying they don't care as much about Form 10Q, right? The expectation is they're still going to have 40 days to get these presented. That should be plenty of time. Keep in mind, as far as the reporting deadlines go, Form 10Q reporting deadline will be the same and will be the only one that has the same deadline for any 2 types of filers, right? Both large accelerated filers and accelerated filers will both have a 40-day deadline to present Form 10Q. Finally, other filers, right? This isn't a large accelerated filer. This isn't an accelerated filer. These are smaller companies that have a market valuation of less than $75 million. So the SEC is telling them they have another 15 days to get that 10K annual report presented. Okay, so 15 days more than accelerated filers and 30 days more than large accelerated filers, which is 90 days in total. Okay, so 30 days at the end of the fiscal year to get these out the door. Plenty of time. All right, whereas Form 10Q is even going to get an extra 5 days to get this out the door. Right, we remember that accelerated and large accelerated filers have 40 days. These other filers have 45 days to get these done. Okay, so let's make sure that we really know this mental map. Let's make sure that we hone in on this because this is very easy points on the exam. You don't want to be sitting there scratching your head trying to remember the differences between the filing requirements for a large accelerated filer versus an accelerated filer, okay, even versus an other smaller filer. Okay, I promise, with how robust this exam is, these are very easy points that you're going to need to pick up. Okay, so let's recap everything we've learned up to this point about SEC reporting requirements, right? Remember, the SEC legally establishes financial reporting standards. The FASB is the rulebook, but the SEC legally establishes it. So we talked about quick and creamy in our 2 primary reports. Okay, we talked about the Form 10K, which is the annual report, and the Form 10Q, which is the quarterly report. But now let's focus in on some of the details of the miscellaneous forms that you also need to be a little bit aware of. Okay, Form 8K is going to require the presentation of major events. Okay, so let's say Quick and Creamy maybe purchased O Canada in the current year, home of 40 flavors. So that's a major event that needs to have a separate filing with the SEC. All right, at the end of the day, this is going to present activities that contain a material or significant impact on the company's overall performance. What about Form 11K? This is a form that is specifically used for employee benefit plans. Okay, so specifically going to deal with employee stock purchases and savings plans with interest in securities that have been registered under the Securities and Exchange Commission. Okay, so a couple of other forms that we should be aware of. How about Form S1? Right up to this point, we were under the impression that Quick and Creamy was a publicly traded company when they're filing Form 10K, 10Q, etc. But let's say for a hypothetical second that Quick and Creamy is not yet a publicly traded company. Let's say that they're planning on going public. So it is then that they would file Form S1, because this is required for companies that plan on going public. Think of this ultimately as a registration statement. So another form that they sometimes toss in there to mix you up, 14A, this is a proxy statement. The SEC requires that shareholders of a company whose securities are registered under Section 12 of the SEC Act of 1934 receive a proxy statement prior to a shareholder meeting. Okay, so again, this has nothing to do with the annual report. This is just a proxy statement. How about Form 3, 4, and 5? This is going to represent forms that are required to be filed by company directors, officers, or beneficial owners of more than 10% of a class of equity securities of a registered company. Okay, so let's say that Quick and Creamy's majority shareholders are Sarah, Richard, and Carla. Each of them own 15% of the company. It is then that Form 3, 4, and 5 is going to need to be filed as well. So at this point, we've met our friends at Quick and Creamy, but now let's touch on the international side. Let's talk about our other two companies. We can't forget about O Canada Ice Cream or 20 Kulfis. So ultimately, there are 3 additional forms that we need to be aware of. Let's start by talking about Forms 20F and Forms 40F. So these are similar to Form 10K on the United States side. So this is more or less the equivalent to the annual report for foreign companies that are filing with the SEC. Okay, so what's the difference between 20F and 40F? Let's start with Form 40F. And we're going to think about our friends at O Canada Ice Cream, home of 40 flavors. So Form 40F is going to be filed for Canadian registered companies specifically. I know that's very specific. Whereas 20F is going to represent the form that is filed for all other non-US based companies. So we're thinking about 20 Kulfis and our friends over in India, right? They're not in Canada. They're not in the US. They're going to file Form 20F. Something else that we got to remember, these two forms are going to require their respective companies' audited financial statements to be included. Okay, so the financial statements need to be audited just like Form 10K needs them to be audited on the US side of this. So how about international 10Q equivalents, right? We remember Quick and Creamy, the United States-based company, is going to report Form 10Q quarterly. So this is sort of similar, but we're talking specifically about foreign private issuers that are subject to the Securities and Exchange Act of 1934 as well. So international companies are going to instead file this form semi-annually instead of quarterly. So instead of Form 10Q, they're now going to be filing Form 6K. All right, so that's something else that we need to keep in mind. Okay, so come exam day, if we're really familiar with this is going to be super nice to have in your back pocket. The little nuances and the miscellaneous details are all going to add up, right? The little details such as what forms are going to require audited financial statements versus unaudited financial statements is going to matter, right? When we're thinking about annual reports, we're thinking about the inclusion of audited financial statements. On the United States side, that would be Form 10K. If it was Canada specifically, that would be Form 40F. And anything else, right? 20 Kulfis over in India is going to file Form 20F. So we got to remember audited financial statements, specifically if this is talking about a form that represents the annual report. If it is a semi-annual report or a quarterly report, then it's not going to require the inclusion of audited financial statements. So these financial statements could be unaudited, right? This is more of a condensed interim financial report. Okay, so if we're talking about the US side, we're thinking 10Q, and we're once again thinking unaudited. On the international side, we're thinking Form 6K, semi-annual, also unaudited. All right, boom, 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 making progress, people. Let's keep moving. Okay, so here's the deal. We've now learned all of our forms that are getting presented to the SEC. So there's a lot going on here, and the SEC is receiving a lot of information. Okay, they could be receiving Quick and Creamy's annual report, which is a ton of information. They could also be receiving their quarterly report. If there was a major event that occurred, they could be receiving Form 8K. If this was an international company like O Canada Ice Cream or 20 Kulfis, then they could be receiving either Forms 40F or 20F. Okay, so bottom line is the SEC is going to be receiving all of this information, and it's now up to them to interpret all of this paperwork. So what are they going to be doing? Are they just going to sit there and plug away manually into Excel God no, that would be absurd. So in the same way that when you take the CPA exam, it's going to be taken in the English language, right? That's the standard language for taking this exam. I know English might not be the first language that some of you speak, but it is the exam's language. So you're thinking about this and you're comparing it to XBRL, right? XBRL is the SEC's financial reporting language. Because look, the reality is all of these different companies use different softwares and systems when populating their financial reports, right? So if Quick and Creamy is using QuickBooks software to create their financial statements, and let's say O Canada Ice Cream is using Excel, and 20 Cool Fees is using their own in-house software, right? How is the SEC going to interpret all of this information, right? They can't just print this one report from one uniform software if they're all different, okay? And they're definitely not going to sit there and plug all these numbers in manually into Excel. Okay, so that's why XBRL was born, right? This is an extensible business reporting language. And essentially what's happening here is that this is a uniform way for the SEC to structure its digital reporting, and it's going to do this by tagging all of the company's data and communicating it with the SEC. Okay, so quick example. If Quick and Creamy simply calls short-term debt payables, while O Canada Ice Cream calls it due to customers, and 20 Cool Fees refers to this as credit purchases, what XBRL is going to do is attempt to standardize this language by tagging this as one uniform listing. So assuming they're calling it accounts payable, it's now all going to be called accounts payable. Right? Essentially, they're going to translate this into the standard language that is reported and communicated to the SEC. Okay, so is XBRL going to be the biggest area tested on the exam? No. But not only is this going to allow you to be better prepared for any possible questions they throw your way, but it's also going to help you better understand the intuition behind SEC reporting in general. Right, at the end of the day, we're trying to make you better professionals. We want you to be proficient in the language of financial reporting. And it starts by understanding how financial reporting actually goes down. Okay, so take an interest in all the details related to this license. It is going to be important in the long run. Okay, so final major takeaway from this relatively miscellaneous VAR topic. We're going to be identifying and understanding the differences in the SEC Act of 1933 versus the SEC Act of 1934, right? We talked about the fact that the SEC legally establishes United States GAAP. And as we mentioned in our very first module, this all came to light after the Great Depression. Nobody trusted the stock market anymore, and the government had to step in. Basically what happened was they created the SEC Act of 1933, which offers guidance for newly issued securities to the general public. So this requires that publicly traded organizations that offer securities to the general public in either primary or secondary markets file a registration statement. Okay, and this is when that 14A proxy statement we talked about comes into play. Okay, because the 1933 Act also says that shareholders must receive this proxy statement at each and every shareholder meeting, right? Basically, this is guidance on newly issued securities. But it's also going to indicate what the company plans to do with the proceeds from the sale of that common stock. Right, let's say that Quick and Creamy is about to issue their common stock to the general public for the first time. Essentially, they're selling equity in the company, right? They're selling the stock to mere you, the general investor, right? So if Quick and Creamy wants to take these proceeds and grow locations internationally all over the world, right? Maybe they want to square up with O Canada Ice Cream and 20 Cool Fees, then maybe they'll be in better position to do so by issuing these securities. Okay, so what's important for the 1933 Act is this is going to require that the company tells financial statement readers what they plan to do with the money, right? It's all about transparency. So what else is required information that must be submitted in this registration statement? So this is going to include the relationship that the newly issued security has in comparison to its other securities being issued. Also going to include any disclosures related to the securities being issued, information similar to that filed in the annual meeting, audited financial statements, and descriptions of business risk factors. Okay, so what's the difference between the 1933 Act and the 1934 Act? So while the 1933 Act provides guidance on newly issued securities, the 1934 Act provides guidance on securities that are being traded subsequent to their issuance. Okay, so this act will provide requirements for periodic reporting and disclosures to the general public. Okay, so what do you know? The date 1933 comes before the date 1934. So we're going to use this as a memory aid. Right, 1933 offers guidance before the securities are issued, as the 1934 Act offers guidance for actively traded securities after they are issued. Okay, so knowing the differences between the 1933 and 1934 Act is just another good way to pick up extra points on exam day.